Hello everyone. Today we're going to be talking to you about different ways that you can manage your debt and also different tips that you can increase your cash flow or put more money in your pockets. So with me today I have Marc Lapalme, who is a financial advisor and also a managing partner at Lapalme & Associates here in Timmins, Ontario. So Marc has 15 years of experience, is licensed in mutual funds and life insurance, and also volunteers in Timmins. So I've had a pleasure working with Marc when I used to work with MMP, and we've stayed in contact ever since. So thank you, Marc, for coming on my channel.
Thank you very much for having me. It's great to be here.
Yeah, for sure. So for anyone who has any questions for Marc at the end of the video in terms of investments or life insurance products, I will put his contact information in the description of the video and also put a link for his website for Lapalme & Associates in the description as well. So for those of you who don't know me, my name is Ryan Banks and my channel is about financial tips and tricks that you can bank on. And I post videos every second Monday at 5 p.m. Eastern. So the first part of the video that we're going to be talking to you about today is a little bit about debt management. So one thing that Marc had shared with me is the average household debt has $1.82 of debt compared to each dollar of cash or investments that they own. So essentially that means that they have more debt than cash. So what do you have to say, I guess, a little bit about that, Marc?
Well, it's kind of a staggering number, and it has increased over the years, and I would argue to say it has probably increased over the last 15 years, at least since I've been an advisor. So to break it down in another way, would be for every dollar you bring, Canadians are spending $1.82. So you're going to be ended up underwater, which a lot of Canadians are. So that's what that $1.82 means.
So do you have a couple of examples as to why, I guess, that number just keeps increasing year after year?
Well, there's a couple of examples. There's many reasons. A lot of people try to maintain a lifestyle that they either can't afford, or at one time they did afford, and something happened into the household, whereas there was a decrease in salary or there was a job loss, and the household spending was not adjusted. Very common, unfortunately. And so because a lot of emotions set in, and it's like, well, this is not going to be very long, which we can keep going the way we are, and we'll just live off of what we have, as well as maybe a little bit of the line of credit. And as time goes on, it doesn't adjust, and or the new job does not have the same salary as before. It's not always the case, but that is what happens, and then you just go down the hill of spending more cash than you make, and then to climb back and fix that involves a lot of changes, a lot of reset in the mind to how to get back into black, let's say.
Right. And I guess during COVID, have you seen that number kind of increase a little bit more? Than, I guess, maybe in the past 5-10 years before COVID?
I think with COVID, from what I've seen, and this is just what I've seen, there's it kind of went either way. I did see some people save some money because you weren't able to leave the house.
Right.
Although you weren't able to leave the house, however, I did see a lot more of eating out, whereas you would have deliveries sent back home, which is fine. There was a lot of people that saved on gas because you couldn't go anywhere. So there was a lot of savings. I did notice a lot of people save money, which was really good. A lot of people stayed home and had staycations because there wasn't much to do. You stayed within your confines of your family. A lot of in-house renovations. I know some hardware stores, they couldn't keep paint on a shelf.
Right.
And it was just a great time to do renovations, and but it also other spending did happen. A lot of people, of course, drank a lot more, and of course eating a lot more too. So but some people did lose their jobs, and that affected what they were able to save and spend, and even there was stories about evictions, and it doesn't end. Of course, it affected a lot of people's mental health, which in turn, of course, affects the money that you bring in and spend. So COVID was a very particular time in our lives, in our recent memory, that we're going to remember forever.
Right. And just by what you're talking about, it just seems like we weren't able to travel, and then it looks like the spending pattern kind of changed into more renovations and other different patterns. So are you starting to see people trying to switch that pattern back to, I guess, post COVID to before times, I guess, before COVID, so that's a similar patterns as to there? Or is it still a little bit 50-50, the same during COVID and then a little bit before COVID where people are able to travel and stuff?
Well, in my opinion, yes, I do see a shift going back to pre-COVID conditions where you can go anywhere you want. A lot more traveling, myself included. I did a lot more traveling on a motorcycle. Did a lot of having fun and taking time off, and of course there's the then there was also the certain restrictions, like you couldn't leave. Like there was certain times, like it was open in Ontario, but you couldn't leave to go to the United States or something. And
right.
I think it is like okay now. And of course, air travel still had restrictions at that time when there was. So it was just kind of slowly getting back to what we used to have as normal. So, but just the change in mindset is different altogether from pre-COVID. And as in people's spending habits, there was, I mean, if you remember during COVID, there was a lot of, we'll say, bulk buying as much as you can, like toilet paper and paper towels and soap, anything really, that you can.
Ready for zombie apocalypse.
That's right. The zombies are coming, so we gotta stock up as much as we possibly can here, because we don't know what's going to happen. It was such an uncertain time, and it's like, we'd almost have to have it as a calendar line item. It's like we need to X those out for factors for any kind of averages that we do. So, and now today I think it's going back. I mean, I see a big difference in vehicles. There's still, although I think vehicles are starting to catch up on the orders. But I mean, you see it today where it's like, pickup trucks come in and then they're sold right away. So those are just backlogs. I think it's more for. I think for the next little while we're going to see more and more backlogs filling up and taking time and just coming back to where they should be.
Now talking to you a little bit about spending patterns, and now we're going to transfer that into good versus bad debt. So, in Mark, what's your opinion between the difference between good versus bad debt?
Well, good debt. So if you want to be a good debt, so a home would be a good debt because that is an appreciable asset that typically increases in price. And I say typically because it doesn't always happen that way, but typically a home is an appreciable debt, whereas like credit card would not be a good debt. It is not an appreciable asset. It is an expense there are carrying costs if you don't maintain it properly. Lines of credit would be the same idea on that. Anything that a good debt would be anything that has an appreciation further down the line. There are even in certain cases, even investments, if you borrow for investments, which not everybody should. There are certain cases why that, as we call leverage loans. There are certain cases and certain people that can handle that and what should be involved. Those would be, again, an investment should be an appreciable asset. So anything that has an appreciable asset and there's a debt leaned on it, that would be a good debt. Anything that you sell that has that wears in price or depreciates in price, that has time and use, like a vehicle, like a snowmobile, like an ATV, those are all depreciable assets, and those are not good debts.
Yeah, so just touching a bit about that. So depreciating assets, it loses value over time. And a little bit more about credit cards, it has really high interest rates, which is around the 20% range, where probably no investments could make that much in a year. Mm-hmm. And if you do, you're probably very lucky, and maybe it's a one-off year.
Yeah, that was a good trick. Like, we'd love to know that.
Yeah, exactly.
Yeah.
So I guess in terms of, even though if you have a mixed bag of good versus bad debt, what's kind of some tips that you can give to the listeners about how they can save or reduce their debt?
Well, that's a very good question. And this is very common that I see, and I've seen over the years. So, and what had happened, so a tip I'm going to say very general. Not everyone is like this. I'm speaking in generalities here. Over the years, we've even from us being a student, you would accumulate a debt, have a student loan for whatever reason, get a tuition for a certain school or housing, anything like that. And then you get offered a credit card. The bank gives you a good credit card, has a good rate. You're a student, and you have a good interest rate. Or you have OSAP. OSAP is another debt, and OSAP when you borrow the OSAP, and I don't remember the rule. I don't know how OSAP works today too much, other than it used to be a debt that you could write off the interest. I don't know if it's like that today.
Well, I could touch upon about that real quick.
Sure.
So a bit with OSAP is you'll get a grant portion where you don't need to pay back, and then you also have a loan portion, and that depends person to person, depending on your application and your personal financial situation. But once you come out of school, I know that during COVID, they wouldn't get you to pay off your debt until a certain date. I'm not sure what that date is. It might have been June 30th or December 31st of this year. But usually you have a 12-month buffer after you graduate until you have to start making those payments. And yes, sometimes there are some grants or they help you pay off a little bit of portion, but that also depends on your specific situation. So you definitely would log on to your OSAP account just to find out more information about that.
Good. Okay, so there you go. That clarifies that. And over the years I've seen whereas things become insurmountable, and again mixed with changes in lifestyle, where there's a new addition to the family, a baby, whereas income was reduced some way, somehow. There was a change in employment, anything like that, even a change in a municipality that makes a big change too. Like any kind of effect, whether it be good or bad. So I've seen lots of debt accumulate that way and just kept on the servicing part or not being serviced. So one trick I've shown a lot of clients with success is I'll just come right out and say it, is just like pay off the smallest debt first. We can there are tips and videos and all kinds of advice you can have out there that'll tell you, so pay off the one with the highest interest rate, or pay off the one or that has or the biggest one first, and things like that. I have not seen good success with that at all, for a simple reason is that not everybody, but most people. A simple reason is that there's a lot of emotions that take place when you're playing with money, or when you're using money in life. Money is part of our lives, and it does deal good or bad in our emotions. And what happens is we ourselves were inherently, we need to see some kind of reward when we work hard at something. Whereas if you work hard at paying off a debt and because it was the lowest interest, I'm not saying it's bad, and I'm not saying this is everyone, but what happens is after a while you don't see the reward on that, because you're still, I'm only halfway, or I'm only a quarter way, and then life again happens for whatever reason. Whereas I've seen more success with people that have, let's say, a $500 credit card, but it has such a low interest rate, or it's tied with points, or for whatever reason. And I asked them, so, well, try paying that off first, and there will be a huge weight lifted off your shoulders. It will feel amazing. Okay, maybe I'm putting a little too much emphasis on it, but it does. So pay off the debt, and then you call the credit card company and say, hey, we're over, we're breaking up. So it's that simple. So, and after that, and then you work on the next one. Then you have one less debt, and then you work on the next smallest debt. It doesn't work for everyone, but I've seen a lot of success that way, and it's very simple.
Yeah, so I do like that, I guess, that method. And one thing is, a lot of people are kind of, they look more short-term, not long-term. So seeing that short-term success definitely helps. And especially when, let's say you have 10 years that you've accumulated debt. Well, if you start paying off debt, that means you need to do some sort of life change, because instead of spending money to go out with friends or going in and out at the restaurants, instead of doing those things, you're actually paying off your debt, which means it's a big mind switch to kind of switch your mind and be able to pay off the debt and not actually spend it.
Yes, and actually, to dovetail on that, as you pay off a small one, then you get really good at it. And then the next one, you have more experience. You're going to develop your own methods on how to do this, and then you're going to be an expert at getting rid of your own debt. It's going to feel great. So that's why it's like, and then when the credit card companies, and I got nothing against the credit card companies or anybody that lends money, I got nothing against that, but this is your money you have to watch. So, and then what happens is when you see them come back at you with a retention, because you immediately go into a department that's called retention, or they have another name, a version of it, where they will do anything they can to keep you on or offer you another product or a solution to help in your situation. You're going to get really good. You're going to get really good at spotting that right away and says, no, it's over between us. So then you move on. You move on. You got to keep your eye on the prize, and then as you decrease your debt, and then you're going to feel a lot better. And then inherently, you see your cash flow go up.
Yeah, and it's definitely a process, and it doesn't happen overnight. But if you take those small little steps, it'll definitely go a long way. Mm-hmm. So another, I guess, segue to kind of switch into debt is, I know that there was one thing that I talked about in a previous video, but there was a lot of overbidding during COVID on houses, and people kind of overspending because they're able to afford those bigger homes because the interest rates are low. But then when it comes time to renew those mortgages, when interest rates are 2 or 3 times higher, what's a kind of little bit of advice that you can tell people? Because I've seen some articles or read some articles where about 25% of people are going to have to downsize because they won't be able to make those payments. So what's kind of some advice that you can give those people?
So those that are in that situation, however way they got into that situation, they're in there now, and the reasoning is, I mean, you can't go back. So if you're in that situation, you're in that situation. There's many reasons why that happened. You got overbid because someone from Southern Ontario was pressuring housing, and that happened a lot because of changes in the workplace, because of being able to work from home. Now we have people from Southern Ontario, and it's not everybody from Southern Ontario, but there's some that they come in, and their main requirement is their high-speed internet. So that way, if they're able to work from home, they can work from anywhere, which can have which can have a benefit in someone in Timmins too, but in another way. Maybe perhaps we'll talk about that later.
Yeah.
And so when you were competing with someone from out of town, they had to come in for whatever reason. You had to overbid. It is what it is. One thing I can, you probably read this, is like, as much as you possibly can, put more money into the principal of the mortgage. Try to bring that debt down as much as you possibly can. If not, bring the debt down of whatever else you have, your vehicle. If you have debt, like we just mentioned, credit card, try to keep it at a one credit card per household. It is possible to have 2 credit cards with the same account, husband and wife, but that's very typical.
Yeah.
But try to keep it under one account, and of course your curb your or be vigilant when it comes to your spending habits at home, because you're absolutely right. When interest rates are going to rise, your mortgage payment at the next 5 years, or whatever is your term, 5-year fix is very typical.
Yeah. It's
going to rise. It's going to be more expensive for you to maintain your mortgage, and it's not going to matter if it's weekly, bi-weekly, or monthly. It's important as much as you can to pay down your debt and pay down as much other debt as you have as well. And like I mentioned before, smallest to the next smallest to the next smallest. And be vigilant on your spending, because when it comes time to renew your 5-year fixed, there's a good possibility it's going to be more expensive. It's going to be more expensive to maintain that debt. And some people, not all, some people may have a harder time qualifying. So you could have another issue there. So as much as you can, service that debt, pay off your vehicle, or even to the point to look for work that has more money paying. So I think that would be little steps that you can take.
Yeah, so one thing to definitely distinguish and just hit off what Mark just said. So when paying down a little bit on your mortgage, you want to make sure that you pay the principal and not just the interest, because the interest portion is calculated based off how much principal you have. So if you bring down that principal amount, when it comes to renew that mortgage, you're going to pay less in interest, which means your payment's going to be lower because the total amount of debt that you have when it's time to remortgage or renew your mortgage will be a lot lower, where you'll most likely or have a better shot of being able to make those payments instead of downsizing a house. So this is the end of the first segment about debt management. I just wanted to quickly go over a couple little things. So even though that you have a lot of debt right now, and maybe that you weren't conscious about it until now, well, today is a great way to start to be able to knock off that debt. And like Mark had said, had a great suggestion on just biting off that smallest amount of debt and get that confidence up that you know that you can start paying off the debt. So Mark, did you have anything else that you wanted to kind of add before we move on to the next part of the video?
The only thing to say to add on, which was exactly great what you said, is you got to take baby steps at this. Okay, yep. Don't take it for granted that this is going to be super easy and super fast. It won't be. Take your time. The only way to eat an elephant is one bite at a time. So just take your time at it. Then develop the skills on how to. And we can almost say it's a job skill.
Yeah.
Because you're going to make money at it because you're not going to be spending it, so you keep it.
Well, that's definitely a great segue into kind of once you pay off that debt, you're able to get more cash. And this is the next part where we're going to give you some certain different tips on how that you can keep more cash in your pockets. So the first thing I want to say is there's this famous quote out there, cash is king. So to you, Mark, what is cash is king?
Well, cash to me is the ultimate confidence booster, is the ultimate, for a lack of better terms, is the ultimate empowerment. Not to say that you need to feel better than everyone else, no. But having more cash in your pocket, and I don't just mean cash as in paper dollars, but having a good bank account, a healthy bank account with good cash flow coming in, that is really good. If you start considering your cash as your asset, as your baby, then that is a great way to increase the amount of money you have. And also, you get really good at buying only what you need and then saving up for what you want.
Yeah. Mark, you couldn't have said that any better. I've said that in previous videos. Buy what you need and not what you want. So it's definitely a great way, and having a lot of cash gives you a little bit more flexibility into maybe getting a few little things of wants that you want, but that's also definitely something calculated, and you need to think about it in your personal situation, because if something works for someone, doesn't mean it's going to work for you, but you need to personalize a plan for you so that it can work for you. Because if you do something very complicated, it's going to be very tough for you to make it work. So just add on to that. So one thing that you had told me, Mark, is you can't compete against the lifestyle that you want. So can you just elaborate a little bit on that?
Sure. Well, and again, this is what I see generally. It's not everybody that's like this, and it's not everybody that has to do this. So, in my opinion, from what I've seen, is like some people, they have a lifestyle they want to compete with. They want to have all the time, but they can't necessarily afford it. So they want to be able to buy a new vehicle every 3 or 4 years, every 5 years. And notwithstanding that if the vehicle is a lemon, I get it. Everybody understands that. If it's a piece of junk, it's got to go. But if the vehicle is good, and it's there's nothing wrong with even keeping it 1 extra year. Whereas I see some people, they base themselves like, well, there's a new vehicle and it's only going to be $20 more a month for your payment. Just sign here and everything's just fantastic. Well, those $20 per month extra, that adds on, and then on your credit score it adds on, and then on your lifestyle it also adds on, and subconsciously too, I believe that it wears on you as well, as that vehicle is on there. And whereas if you kept it for one more year and the vehicle's running fine, and then that's, you know, it's another thing. Even if you did another year and then buy another vehicle the year after, you know, then you will be this much further ahead. Same thing with other things. Like one thing I've seen, and I've mentioned to you, it's like if there's you have several TVs in the household,
Yeah.
and all of a sudden one conks out, and then right away, like you know, someone's ready to take the credit card out and go buy another one. And what happens when you buy another one? Well, you're going to go to the store and going to look at another one, but you're not going to buy the one that's going to replace the one that broke. You're going to buy the one that's going to replace the main one, and then do a cascading of
work down the food chain.
There's going to be a hand-me-down process. So the dog still gets the smallest TV.
Yeah.
And I'm just kidding there, but that's how it is. So like, to me, it's like you could work the other way. Whereas, you know, like, hang on a second there. It's like, if the TV in the household conks out, then maybe someone in the household needs to be, you should tell them, like, look, I'm confiscating your TV. And not that I want you to be, let's say I'm going to say, you know, tell your child, it's like, well, we're taking the TV, unless, of course, they bought it. But it's like, if it, you know, we're going to take your TV, we're going to move it somewhere else. It's like to me, there's maybe some people might have a contentious issue with that. Is like, if you tell your child, it's like, hey, look, you know, we need to save some money and we can't spend right now, and let's just, you know, wait a little bit and see what happens a little while. It's better to do that when things are not bad.
Yeah.
Rather than if things are bad, then you have to do a drastic change in a household, and everybody's unhappy. So, you know, sometimes it's for the greater good, and just these little steps are like, you know, this is just for a little while, and then we're gonna be okay. So, you know, especially if you have more than one TV in the house, and there's other things that apply to that too. It's like, it's not just televisions; it could be, you know, a phone or something like that, or
well, it's anything that you want, essentially.
Exactly, yeah.
And then just something just to add on, it's, yeah, you buy yourself a TV or you buy yourself a car, but it's not just that initial purchase. There's always some additional costs that come after that. Like buying a TV, well, if you plug in an extra TV, that's more electricity you're paying every month. Or if you buy a car, well, you got to pay insurance, you got to pay gas, you got to pay maintenance. Like, anything could go wrong. So there's always those additional costs that you need to think about when doing those types of purchases.
That's true. The devil is in the details when it comes to that. The add-ons, you hit the nail on the head on that one.
Yeah.
There's always these little add-ons, because you buy a TV, it's like, well, we have a warranty on this TV, and it's like, we have a warranty on the cable that comes with it. And it's like, you can upgrade this and that there, and it's very easy to just tack that on to the sale. It's all done.
And say yes very quick, or even just doing that little tap at the debit machine.
Yeah, the little tap at the main click, and it's all done. Everyone's happy.
Yeah.
So that's how you slip down a slippery slope.
So now that we just quickly talked about how maybe you need to do a little bit some lifestyle changes, but here's going to be a few different tips that you're going to definitely find useful to put more money in your pocket. So one is kind of buying in bulk. So I know that we talked a bit about this, but can you kind of elaborate a little bit more on that?
Absolutely. Buying in bulk for many years, and even at some certain point today, you can see some savings, but you have to watch on what those savings are. You really need to calculate right down to the cost per millimeter or per milliliter, the cost per gram, the cost per liter, everything. You have to, because what happens from one store to another, the bottle of mustard is not the same size, and you look at it, it's like, well, it's probably a lot less money over here, and you really have to watch out, because again, you can go down a slope where if you go down, you buy you go to a bulk store, and then it's very easy to say, well, this is, you inherently think that it's a fantastic deal, so you just put it in the cart, next thing you know, you got $1,000 worth of goods, where it's like, if you really broke it down and consciously looked at it, and it's like, you know, how much more did this cost me, or less? How much did this less cost me?
Yeah.
And then really compare it to, like, per milliliter versus buying it at a grocery store, that your favorite grocery store, or let's say the cheapest grocery store locally, how much money you're really saving. And a lot of times these bulk stores like Costco, and I got nothing against Costco, you got your membership you got to pay, and we don't have one here, so you got to drive down.
Yeah.
3 hours back, you're spending gas. And because I see it all the time, I'm going to go to Costco to go save some money. You're not, and I've bought there. I do buy there, but I'm very conscious on what it is. If I can get the same thing marginally locally, I'm not buying it there. I'll buy it here because it's the same thing. So and I got nothing against someone saying they want to go to Costco's, but it's okay to say, I just want to leave Timmins for an overnight and come back. That's fine. That's okay. Okay, you don't have to come up with an excuse to say I want to go there and save money. No, you're not. Yeah. So, but it's okay to leave and enjoy yourself and have a good time and then come back. Refreshed. Everyone needs that.
Yeah.
But be conscious, and you look at your household staples. Your condiments that you regularly buy, like ketchup and mustard, toilet paper, anything like that that you buy, and your consumer staples, in other words, and that you go through the households, and this is where the rubber hits the road. Really, really write down how much everything is costing you, and then find out exactly where locally is the cheapest price. This is where your cash flow goes up. So it's good. You'll find a huge surprise.
Yeah.
A huge surprise. Not to mention, talk about bulk. Whereas you want to have a freezer, and you have a big enough freezer, and you're saying, I'm going to save all kinds of money by putting more meat in there and everything. Be careful with that. Be very careful with that. Notwithstanding if you live far away from your local grocery store, and then you come in, once a week in town, or to buy a lot, that makes sense.
Yeah.
That makes sense. But if you live 5 minutes from your grocery store, then you will find some good savings. Good savings if you just go to the grocery store like once a week and buy for the week.
Yep.
Okay? Buy for the week. And then you look at the deal of the day. Because although if you look at it as I'm going to save a lot of money if I buy in bulk, perishable goods are very dangerous to do that, because you'll either be forced to consume it early, or it's going to have freezer burn, or it's going to be perished.
Yeah.
So, and then it gets thrown out and it's wasted. Whereas having more money in your pocket and then just buy the deal of the day at that time, makes more money in your pocket, and then less inventory at home. And unless of course we have an apocalypse.
Yeah.
I think you'll be fine.
Yeah. Well, just to add on to there, Mark was saying you want to calculate like per gram or per milliliter or per liter, whatever it is. If you're a pen and pencil type person, you probably have a grocery list, so you can quickly jog down a quick little calculation on there. Or if you're more techie, open your phone, there's a calculator on there, and it's really easy to calculate that. And one thing that our family does is whenever I go see my sister in London, or my parents do, they always stop at the Costco over there and bring back, and they kind of do a little bit of bulk shopping over there, but they're not going out of their way to go to Costco. They're already there, and it's really close when they're there, so it makes sense for them to go to Costco then. It's not like going from here to Timmins for the day, driving 7 hours just so it can buy in bulk. Well, you're definitely going to spend a lot more in gas than what you save at Costco. So the next step that we kind of want to talk to you about is about your vehicle. So I've seen people in the past, and I've done videos about this, but it's people always change your vehicle every 2-3 years, and the first thing is you're always going to have car payments, and that's not good because it's a depreciating asset, like Mark had previously mentioned earlier in this video. So you definitely want to buy a vehicle that you need, not that you want, and also consider on how much warranty you have, because you don't want to be paying off your car while paying a $2,000-$3,000 repair on your car if that's the case. So I guess in my personal, like when I purchased my new vehicle, I had did a 4-year financing term with the dealership, and I had 5-year warranty. So I'm gonna have about a year's worth of car payment savings. I guess we can talk, or I guess more cash in my pocket. So in terms of vehicles, Mark, what's kind of some other things that people may want to know?
Well, those are very good points, and I did watch your videos on on choosing the vehicle that fits your lifestyle, which is a great video.
Thank you.
That's very important. Actually, choose the vehicle that your household needs. Here we live in Timmins, so and the way actually our entire lifestyle is here in Timmins, because we revolve everything around winter, because winter is so harsh here. So the way we build our homes, the way we clothe ourselves, the way our vehicles are, it's and how their tires and everything, everything it has to be based around winter. The way we plan our trips, everything has to be considered especially when it comes to winter. So you have there's the lot of consideration. Now today, it's like you have a lot of vehicles, and I always believe in all-wheel drive vehicles. Is that to me that's a necessity, just for safety and that. But having a good vehicle, or having the right vehicle for your lifestyle is very important. So if you have a family of 4, then you want to make sure that everyone's comfortable in that vehicle, and you want to have a larger SUV or a pickup truck, and then you can have room in the back to carry whatever it is you need. More than this, like I'm a little different when it comes to buying vehicles. I'm an automobile enthusiast, so I've always bought used vehicles.
Yeah.
But I have a mentality that's really different. Whereas I try to find the nicest, most accommodating, or let's say the best shape I can, the vehicle that I want, with all of the options that I want and or need, but I want to buy it at the lowest price possible, because I know there won't be a warranty on it.
Yeah.
Okay. However, if it's a common enough vehicle, that's another factor. Then any repairs that I do, which actually, if the vehicle should be half price of what new is, so then, and you got to have cash flow for this.
Yeah.
You got to have cash flow for this. You're able to, so something happens, you gotta redo the front end or redo whatever, and that happens. You got to do maintenance. Then the money that I spend on there is still cheaper than the car payment for that year, or even for brand new, or even having to put up with a warranty claim. Warranty claims are normally really good, and sometimes they're not. So myself, I always say, I process my own warranty, I approve my own warranty, and I pay my own warranty. So the money that I save from buying new, that's what I use as my warranty. And can't say that it's always been great, because sometimes you get a lemon. I've had lemons too.
Yeah.
But I've saved a lot of money doing that. But you have to have the mentality that vehicle is going to need to be fixed. You have to have your supplier lined up, the garage that you're going to use to get it fixed, and everybody's got to be on board with this. And you got to be conscious and on how vehicles work, and things like that. But that's how I do it. Not everybody's like that.
Well, just to add on to that, for me, he's a car enthusiast. I'm not. I'm just a bean counter. So I know not much about cars, which is why I went for a new vehicle and a 5-year warranty. But just touching, I guess, a little follow-up question. So when you first go look and start looking at used vehicles, how much, I guess, down, or how much money up front that you would want to pay? Is it a full amount, or is it a portion and then you finance it with a dealership, or sometimes you have a line of credit? What's your approach on that?
Well, actually, all of the above. Those are really good questions. Actually, it's a lot of encompassing in there. If you have a line of credit, then you can watch on the line of credit what the interest rate on the line of credit is. It always changes.
Yeah.
It's never, it's like, oh, this line of credit is going to stay like, because it's a variable rate.
Yeah.
So I use that in my back pocket. Like, I have a line of credit, and there's zero balance on it right now. So it's just my safety thing, if in case I need it, it's there. So whereas you can buy a vehicle if you're comfortable with the vehicle, as in a private sale, okay? then you're comfortable with it. And again, if you're a car enthusiast, you understand how vehicles work, and you understand you're taking a risk. So things like that. Whereas buying it from a dealership, a used vehicle at a dealership, then to me the first thing you do is, whether you're buying it local or buying it out of town, find out where the best deal is first. Doesn't mean you have to go there and buy it, but find out the best deal. What is this vehicle worth out in the open market?
Yeah.
And start your shopping there, and then you figure out what your budget is on what you can spend on the vehicle. That's another big thing. How much can you afford to spend per month if you have to finance it? So whether it would be a higher down, if you get a lower payment, that's fine too. That's all those numbers have to be taken into consideration. The biggest thing when it comes to buying a used or even new vehicle is don't rush.
Yeah.
Don't rush. It's just take your time. Like, I've seen myself take, when I knew I was going to buy a vehicle next year, I take all year to see how vehicles, and I look at the trend of that vehicle that I want. Is it what's it trending at in price?
Okay.
And I start looking. So then when I'm ready to buy, and I'm like, I know this vehicle here, the way I want it equipped is going to be this much.
Okay.
So then you look at interest rates for loans at banks. There's the banks and there's the dealerships, because they offer from the same suppliers from the banks.
Yeah.
So your Toronto Dominions or Imperial Banks and all that, the dealerships have access to those too, and more often than not, they're cheaper than what you can buy at the bank.
Yeah.
So, and here's something you've probably heard many times. I've been dealing at so-and-so for 50 years, and they're always giving me a good deal, and then they find out at the dealership it was a better price. So shop around. Don't take anything lightly. Go look at the price and look at the shop around. It's your money. It's like, so your money, treat it like your baby.
Yeah.
And then you may have a miss, but more often you'll get a hit.
Yeah. Well, it's definitely a great point, and I guess just to quickly summarize that is, always do your research, because if you do your research, you're making an educated decision. And that's definitely a lot better than throwing a dart on a dartboard. Now, next thing I just want to talk with you guys about, and obviously with Mark too, but it's kind of, I guess, what are some different ways that people can increase their cash, and what, I guess, some things that they can do at home to be able to put more money in their pockets?
Very good question, and it's something else I've seen over the years often, and is that, and I don't think it's being done enough, or even looked at enough, or even thought it was as an option, is that to increase your cash flow, well, of course, there's what are the options? Well, you got to get another job and make more money. So that'd be the other thing, or one is like win the lottery. So the lottery part, can't bank on that, because good luck with that. So it's just luck of the draw. Whereas several things you can that I've seen work, but you have to get out of your shell, is that look at your options, look at what you're qualified in doing in life. So if you're working at a particular job, doesn't matter where you're working, okay? Doesn't matter where you're working, and is that what with the qualifications you have, are you worth somewhere else?
Yeah.
Okay, perhaps you're working at a certain place and he treated you well, and you got a great boss, you got great coworkers, it's fantastic, but you're in a rut and you're stuck at that certain price that you're getting per hour. What are you worth elsewhere at their competition? I'm not saying leave where you are, but what are you worth elsewhere? Okay, and not to mention, it's like, well, can that person that you're currently working at match it or even come close? If you, let's say, get an offer for the same job you're doing with the qualifications that you have at another place, okay, and I've seen this actually kind of work as well too, but there's work involved. But if you want to make more money, there's work involved in any time you make more money. Whereas they're offering you X amount of dollars, but you love working where you are, then it wouldn't be a bad idea to offer the opportunity to your current employer, saying, can you meet me somewhere in between or halfway, if not all of it, for me to stay here? Even if it came halfway, let's say they split the difference on what you're making, that's not a bad deal, because the hassle of moving is a big hassle, but at least you got something is better than nothing, and then things will change for you. And another thing is that, and I've seen this example several times, where it's like, actually the firm you used to work at, or even any firm. Okay.
Yeah.
Whereas there are, let's say, a bookkeeper. Okay. Whereas your bookkeeper wants to make more money. Okay. Well, the only way you're going to, so what I'm thinking, correct me if I'm wrong here, because I don't work in a firm, in an accounting firm, but the only way to make more money is like you have to qualify yourself to have another designation and work in the other side of the building or the other offices.
Yeah.
So what is it you need? What education do you need to get to that? Whether it be from a bookkeeper to a chartered accountant, anything like that. So what is it you need? Well, in courses today, or not like it was when I was going to college.
A lot more expensive. Yeah.
A lot more expensive. That's true. But if not that particular course, you might be able to upgrade your skills a lot more with a lot of online training. Yeah. Maybe not. So that's something to look at. And it's not for everybody, but it's, and that does not just talking about accounting. Let's say you're working in a warehouse, and then you're just moving the inventory around. What do you have to do to become the purchasing agent?
Yeah.
What do you have to do to work in administration or in management? So there's several skills that you just have to upgrade your skill, and then right away you're qualified to make more money. So little things like that.
Yeah. So just quickly to add on to that is, right now there's a shortage, I guess, of workers, and it looks like the market, like, not a lot of people want to work in a relative term, but employers also want to invest in their employees, because if they invest into their employees, they're more likely to stay. And you're talking about courses or professional development, or again, those extra certifications. Well, ask your boss, ask your company if they're able to pay a portion or all of it. And that's definitely something that you can talk to your bosses about, and that's definitely something that can entice you to stay, and that's definitely something that your employer will probably want as well. So that's just something to also think about. Even though, yes, it's maybe more costs, well, maybe it's, I will get paid X amount and the payback will be, let's say, 6 months or 8 months. But if my employer can pay that for me, then doesn't cost me nothing, but then my wage increases, which means I have more wiggle room within my budget to be able to spend on the things that I need.
It's a very good point. Very good point, because the little extra time, and there's going to be some training. Perhaps you have to train yourself at home. Yeah. And I get everyone is very busy at home. You got a family to manage. You have many things going on, but it is worth it if you can spend the time to get those skills. Talk to your employer, talk to your boss, and say, what can I do to, if you're a good employee and they like you, they want to keep you. They want to keep you. So, and then they would rather keep you and then bring you up to another position in that company, and then bring on someone else for you to train what you used to do. They would rather do that, okay, than them to start over.
Yeah. It definitely costs the company less money, and it obviously entices the company for you to stay, and it's overall a win-win situation.
Absolutely.
So another thing too, just I want to touch upon really quickly. So let's say you have a job, you really like your job quite a bit. Well, is there another type of skill that you can do like a little side business or a little thing on the side to kind of increase the amount of money that you bring in each month? And that's definitely something that you could think about. And like, that's something like what I'm doing. I love my job right now at the school board, and I'm doing taxes and stuff on the side, so that's kind of bringing in extra income. So there's definitely little ways that you can think about increasing that cash flow. But then the other side of it is, you may have X amount of cash coming in every month. So what are, I guess, some ways that you can kind of decrease your expenses while still kind of living this similar type lifestyle?
Well, there's your consumer staples that is what we touched on it.
Yeah.
Like making groceries and then trying to keep what you can for the week. That is one big one. Also, when it comes to, let's say you want to, you're used to going on a vacation once a year. You're going to the Dominican. You're going to somewhere hot, and you're spending it on your credit card. Come up with a little cash piggy bank, anything like that, where that money should be saved up already. And then still use your credit card if you want to get the points, but then you're paying it with the piggy bank after.
Yeah.
So that way there, that keeps you debt free. And other things that you want to increase your cash flow, declutter the house is a huge thing.
Great.
Declutter the garage, declutter anything. It's like even just having that piece of whatever that is that you haven't used in so long, it frees up your mind. That square footage costs money.
Yeah.
That square footage is taking up space in your house. You've paid for a certain house that has whether it's 1,200 feet, and you're only using 900. Well, there's 300 that's not accounted for properly. So it may seem kind of mundane talking about that, but if you free up that area, I guarantee you you're going to feel a lot better. You're going to have a better use for that space after.
Yeah.
It will be good. Be very good.
And just because you clear up the space doesn't mean you need to buy another TV.
No, it doesn't.
Yeah.
No.
But yeah, just to touch up, some very good points, Mark. And just to add on, there's also some small things. You can literally look at a bank statement real quick, or even your bank statement and also credit card statement, and see exactly what you spend every month. And just quickly glance in, and you can say, holy smokes, I actually spend like $600 in groceries a month. Well, I thought I was only paying $4. So those are like kind of different little things that, okay, well, what's maybe a way that I can decrease $50 this month in groceries? Or maybe I can ask work to potentially work from home if they have a hybrid environment where maybe instead of commuting 30 minutes every day, maybe I only work at the office 2 or 3 times a week while not spending an hour worth of gas every day for, let's say, 2 or 3 days a week. It definitely accumulates over time. So it might just be like these little $5 or $20 here and there every month. But when you look at it over a year, that's $240 for just $20 a month. And if you do that 5 times, well, or even 4 times, there's $1,000 just quickly like that. So it kind of accumulates quite a bit very easily just with those small little changes.
Yeah, absolutely, and very good point. See, I just took it for granted, and you brought it up, which is great. Another thing too is when you go to the drive-thru and grab yourself a coffee, it's a lot less expensive to just get yourself a coffee from home to go into work. Or if work is providing coffee, then that's a perk of being at work. So there's money savings right there.
Exactly.
Okay, so there's you don't have to be stuck in drive-thru every day at -40 and you absolutely want your coffee. If work is providing it for you, then enjoy it. That's money in your pocket. Very good point.
No, for sure.
Yeah.
So now, last thing I just want to touch upon with you guys, and because we have a financial advisor here, is I guess what are some advantages of doing some tax-free savings and RSP contributions?
Well, there's many to have both, many reasons to have both, many advantages to have both. Since the introduction of tax-free savings, which has been since 2009 now, it's changed the landscape when it comes to financial planning, very much so. You had made a good video on how to start a CRA account, or how to register for a CRA account. That's fantastic. 2 things that I've noticed that everyone should know is, of course, their RSP deduction limit. How much room do you have in your RSP deduction limit? The other one is how much room do you have in your tax-free savings account, your TFSA limit. Very important numbers to always keep in mind of. And there's a ton of videos on how the tax-free savings account works. My goal as a financial advisor and in helping families and people and business owners alike is that how do we make that mix work together? So when it comes to tax-free savings, now, in my opinion, the tax-free, and actually altogether, tax-free savings account, or TFSAs, should be treated as a retirement plan. Okay, it should not be treated as, I'm going to save up money that's going to buy me a boat. Okay, like that was not the intent of a tax-free savings account. The tax-free savings account should be treated as a retirement plan. If you treat it as a retirement plan, it'll be extremely powerful for you at the age of 65 or 70 or 55, whatever that is. Match that if you have a a pension plan, or if you have an RSP where, let's say, the company contributes to a certain part of RSPs. If you have a group RSP at work and then you have a personal RSP, those are they use up the same room, but they work a little differently. Whereas a tax-free savings account, if you put in your $6,000, or if you have contributed since the beginning, since 2009, and you put in the maximum, not everybody could, but if you can, then what's going to happen is at the age of retirement, actually you decide. There's really no limit here.
Yeah.
There's really no limit here. What happens is you decide when to take out, because once you put the money into tax-free and then that growth is absolutely tax-free, you're done with the tax man.
Yeah.
It's over. So that money is yours. So you can take that money later on. It won't affect your income in any way later. Okay? And then you use it for what you need. Some people can use it as an income. You can actually put it into a steady stream of income, and it'll be tax-free. Yeah. Okay? And while still maintaining growth, while still having growth. So, though, extremely powerful tool.
Yeah, just to quickly add on to that is, even if you get about $6,000 of contribution room into your tax-free savings every year, even if you can only put $500 or $1,000, if you start early, your investments will compound and grow a lot quicker if you start earlier, which means you're going to have a lot big, I guess, a honey pot at the end or when you retire. And then when that's the case, you won't need to take out as much out of your RSPs and get taxed. So I guess I know that you mostly talked about tax-free savings, but I guess what are some little bit advantages about those RSPs? And I know that you quickly talked about matching, your employer matches. Mm-hmm. So I know that's definitely one thing I want to touch upon is if your employer matches a certain percentage, max out that certain percentage, because you automatically get 100% of your investment rate at day one, which means you can double the amount that you put in, and then that investment grows over time. So with that, I guess what are some other things that's, I guess, advantageous for people to have an RSP?
Well, other than that, and there's also different styles or different methods when it comes to the contribution side. You touched on it quite well. Match whatever the employer is matching. Match.
Yeah.
Okay. Go do as much as you can. And not to also to mention, speak with your financial advisor, someone you like, to talk about which type of funds your contributions should go in. If you're young, okay, or you have a long time horizon, perhaps most likely your financial advisor, at least would be go towards a little more aggressive fund, because you have nothing but time to have the markets go up and down.
Yeah.
And I can do a whole segment on how that works. So what happens is you want to have, if you're a high income earner, we'll say like $80,000 and up, or even $60,000 and up, and you want that RSP deduction limit. You want that contribution to affect your income, to have, in other words, that income tax cashback.
Yeah.
You want that. You want to be able to bring down your taxable income, and you get that refund, put it into a tax-free savings.
Exactly.
There you go. So that is a great way to give yourself a great nest egg. Your future self will love you for this. So
yeah.
And then the idea behind an RSP, and I've heard this so many times, is that, well, I'm getting a deduction on my income, but then I got to pay the taxes back when I start taking off. Yes, but that's not exactly how it's worked or how it's meant to. Okay, if you're making $70,000, $80,000, whatever it is you're making, you're at a certain tax bracket. What happens is, the idea is when you retire, the idea is your debts are paid. You probably have your last vehicle or second last vehicle. Everything's settled. You're an empty nester. Your kids are gone, and now you're going to focus on just you and your spouse. You're not going to draw. You're not going to spend as much money as you did when you were in your income earning years. So your tax bracket will be much lower. That's how you win. Okay, you get the tax break at the top. You take that money away, put it away in an RSP, and then when you start your income, whether it be taking the RSP out, or whether turning into a RIF, or registered retirement income fund,
yeah,
take it at a lower tax bracket, again, assuming that your debts are managed or paid off, this is where you win. This is where more of that money is in your pocket and less of the government. Okay, so that is the concept. If you follow that simple concept, and then along with taking your tax break money, put it into a tax-free savings account, and you can invest it the same way.
Yeah.
Whatever way you're investing, whether it be mutual funds, segregated funds, stocks, bonds, anything, you can do the same thing with a tax-free. You can have it grow the same way. So that, and this is where you win.
No, that's definitely some good points. And I've heard a lot of friends say, oh, but my friend told me I should do this. Well, maybe you go talk to a guy like Marc, because they're the experts. And even if it's a half-hour conversation, and even if you only get one or two things, it can go a very long way. So it's definitely something, and I've told a lot of clients about this, or I've seen this, where people come to see a tax guy when they're in trouble. But if they had the right planning when they did their whatever situation that they did back then, and if they set it up properly right at the start, then they don't need to kind of do some fixing or do some adjustments that way. So definitely go talk to a financial advisor, and I definitely will have Marc's contact information in the description of the video if you have any questions for him. So just quickly to wrap up the video, today we went through a few different ways on how you can manage your debt. So a couple ways is to pay off that principal amount on your mortgages. And also, if you do have a lot amount of debt, don't panic. Go see an advisor. But the one good thing that Marc had told us is pay off the smallest amount first, so you get that confidence and know exactly what it feels like to pay off that debt. We also talked about different ways that you can keep more money in your pockets. So different ways is try to look different ways on how you can reduce your spending. So it's like looking at your bank statement or credit card statement, or just looking at the ways that you do your spending. So try to reduce that. Also, see if you can increase your skills or get extra certifications, because that's definitely something that can increase your wage and increase more cash in your pockets. And also look into contributing to your tax-free savings account and your RRSPs. So again, thanks Marc very much for coming on to the channel. It was definitely greatly appreciated. You definitely helped the listeners get a lot of different tips on debt management and also keeping cash in their pockets.
My pleasure, Ryan. Thank you very much.
Yeah, and yeah, for those of you that want to know more about financial tips and tricks, definitely hit that subscribe button, because it'll help grow the channel and get more people to watch the videos and get these awesome information tips, and get more people like Marc to come on to the channel. So I just want to thank you very much for watching the video, and I hope you have a great day.